So in this video I want to talk about one of the biggest mistake every new trader, and not only new traders that are also trading for over 1 year, 2 years, is they don't know how to identify the market trend. What I mean by that is, let's just say GBP USD, for example. I chose this pair because I have it recently, so it's here and there, and everyone got confused, and it's like actually normal. Trust me, it is. So if I show you this chart here, if you don't look exactly what it is, if I show you this chart right here, the weekly, you will think it is bullish. And by the way, I'm only referring and talking about the day traders and swing traders. Scalping, it's a whole another new thing. I don't even know about it. You can get money out of scalping even if everything is bullish and you just sell. That's completely different. I'm only talking about day trading and swing trading. So the traders that hold the trades less than a day in few times, and most likely will keep it more than a day to 2-3 days. So at least what I'm doing, I need to know the market trend. I need to know the two highest time frames I have, weekly and daily. I need to know what it is. I cannot go and say I will sell against a bullish market. That doesn't make any sense. My confluences are already against me. So when you go to the weekly time frame, everyone will see that and will think, okay, because price is going up, it's probably bullish, which is completely wrong. You have to figure out the so-called elbows to see where the market is creating higher highs and higher lows, and if the market is breaking those higher highs and higher lows. And how are you gonna do that? Exactly how am I doing it right now? If you're a beginner, just take that tool here and draw the path of the market on the candlesticks. Remember, always try to end at the bodies, not the wicks. Finish it at the bodies. The bodies are the ones that count, not the wicks. So having that, you can clearly see higher high, higher low. If we have breaking up, higher high, higher low, higher high, higher low, higher high. So this is our higher low, this is our higher high. And what price does? Breaks below our higher low. What does that mean? It means a break of structure. So it means that we are now currently bearish. So this time frame right here is still bearish because neither that or that has been violated and broken. If price doesn't close above, so we break the structure, or if the price never closed below, so we have a new lower low and a new lower high, price remains the same. We are bearish, price can do whatever it wants inside this area, as long as it doesn't break above or below and we have nothing new, the market still remains bearish. And one other key thing to have in mind is always wait for the candlestick to close, because as you could see here, if I take that and draw it on the top of the bodies, you can see that the wick closed, like the wick of the weekly candlestick closed above that, but that doesn't mean anything. The structure, the market trend hasn't changed. It needs for the body to close above. This is just nothing. So that means that that one is still a lower high, and this one is our lower low. Nothing has broke those two. At the beginning, I know it's hard to identify because you need to find the elbows the so-called, like we call them elbows because it's the shape of an elbow, and that is what we define as lower high, lower low, higher low, higher high. So this is what you need to have in mind. You need to know the market trend. If you don't know the market trend, you cannot go outside and press buy or sell. If the market is bullish on the weekly and bullish on the daily, why would you go on the 4-hour, 30-minute, 1-hour time frame to find an entry and sell? I don't say that if you do that you won't win the trade, but 8 out of 10 times you will lose, and then you will wonder why. What is wrong? The thing that is wrong is that you're going as a day trader and swing trader and selling in a bullish market. That is what is wrong. Of course, the price can go up. As you can see, the weekly is bearish now, but the daily has shifted bullish because this was here the lower high and lower low that was keeping everything. That here didn't close above. If you zoom in, you will see it. But now that's broken above, so now we have a higher low and higher high. We break the structure, but that doesn't mean anything. That doesn't mean that I will go and buy the market because the daily just shifted bullish. I need those 2 time frames to tell me, you know what, this market is completely bullish or it's completely bearish. If one of those 2 are in balance, then for me it's not interesting. That's why I have so many pairs to look to, so I don't depend on one. So that is one of the biggest mistakes that everyone is doing. Learn how to master the market trend. If you want to see more, follow my YouTube channel. I will upload those types of videos. And if you want to do more and get more serious about it, I have a completely free Telegram group chat, exactly the name, and I will leave a link in the description. And there I share fully free, completely free, my entries, my exits, how I view the market, and also I'm teaching people, if of course someone wants to. Otherwise you can just stay completely free and watch me doing wins, losses, and being active in the market while you standing in the sides and just watching. I'm currently 28% up in the last 3.5 months. So that is for today.